All right. Good afternoon, everybody. Uneducated Economist here. So, I just got back to work today off of vacation. I was going through my emails, and many of you know that I get a email once a week that kind of gives me an idea of what it is that's taking place throughout the nation and the different regions and the different type of lumber markets. And it's usually just kind of a brief kind of idea of what it is that's in place. And now something that we have talked about here on this channel for quite some time is the mill curtailments and inventory depletions that have been taking place throughout the last year. And really, it's been about a year and a half, almost 2 years since it's really started kicking in, and now has come to a very critical very critical point inside of the economic conditions in which that we are facing, especially if it comes to any kind of increase in demand. If demand for lumber increases significantly, and I don't even know if what significant would really mean on this level, like any kind of turnaround in idea of like market conditions. Right now, people feel that it's really bad. The moment that they feel that it's not bad, it's over. Like the lumber prices will go through the roof. I am sure of it at this point. Now, let me break down some of the stuff that I get inside of this email, and I just wanted to share it with you guys. I don't know how long I'm going to make this video, but really, it's probably going to take about 10 minutes to get this information out. It says here, demand was largely unchanged, with supply-driven dynamics still very much in place, keeping prices firm to higher across most items. Dimensional lumber from 2x4 through 2x6 posted gains. Buyers are often more focused on tally availability. Now, in the West, what we are facing right now is definitely some issues within the 2x4, 2x6 market, trying to find those available units. And this is, one of those reports within. But it's not just happening in the Western SPF, right? Over in the eastern side, it says the market experienced a slower pace of trading this week as dealers took a breath to digest earlier purchases, allowing monetary stabilization in prices. Now that's on the eastern side, right? But this is the part that I wanted to go. Producer order files have continued to push out, and now that's the kind of the idea of how available is that lumber. Like if the moment that you order it, how long does it take to actually receive it? And that is now pushing out further and further, even on the eastern side, considering that they are experiencing somewhat of a slower pace, right? And I wanted to bring that part up, is that order file is getting pushed out further and further and further away, right? So that's, again, like how quickly can you get this? Going over to the southern yellow pine. Lack of availability on southern yellow pine and 2x4 and 2x6 remain the drivers of pricing. There are very little narrow widths out there in 10-foot to 16-foot long. And again, this is something that we have reported on here on this channel for quite some time. Like I noticed it in some of the wider lengths that were longer. That's when it showed up here on the western side, at least for me. That was one of the first ones I saw it in. This is talking about the southern yellow pine market in the two most popular lengths out there, or dimensions out there, 2x4, 2x6. This is your wall and plate stock, by far the most popular sizes when it comes to framing lumber. And this is the stuff that they are now short on. It goes on to say this. This is something that is interesting. I've never really seen this reported before. It says, this is also creating shortages in the shortages if 2x8 and 2x10, since mills can cut these into 2x4 and 2x6 and make higher margins. I never really heard that reported like that before. And so to think about it, like how is it going to put strain on the other sizes out there if 2x4, 2x6 is essentially unavailable or limited in availability? The mills aren't going to go into those other products and start making those if the ones that are in demand carry a higher premium and higher profit margin to them. So this is going to start putting strain on the rest of the market out there as far as the sizes. Meaning like your 2x8, 2x10, 2x12, all that stuff is going to get a lot more expensive. Excuse me, guys. It says here, the main driver of prices is mills adjusting their production to meet demand. We do not see the southern yellow pine market changing very much anytime soon. And again, this is the point being. Nobody notices this right now. This does not get reported out there in the news. Nobody is really going to talk about it unless you are in the lumber game, if you are working a mill, if you're working one of the distribution hubs, something of that nature, but not Wall Street Journal. They're not going to report on it. I mean, they'll report on it after it's too late, but they're not going to report on this as far as it's taking place right now. This is a major problem that most people will not understand what is happening when the market does turn around, because at some point it will. I know a lot of people don't believe that, and maybe they're right. I don't know. But at some point the market will turn around, right? And when it does, and that ramping up of demand starts to take place, there's simply just not enough material in the system. It's just not going to be there. And people are going to call it greed and manipulation and all kinds of stuff. But right here, it's being talked about way ahead of time so that you can get prepared for it. It goes on to say this in the Western species dry dimension. It says, consistent demand takeaway this week. So, right, these two are in balance. The market continues to inch upward. We expect this to continue in the near term. We're still not seeing much downside out there in the general. Mill inventories remain bleak. This is again in the Western species dry dimension. This is the one that I'm most into. Is like we don't even stock green lumber. Haven't brought a unit in for a very long time. It says here it's 2x6 and 2x12 dimensions, along with 92 and 5/8 trim studs, which I think is pretty funny because California and I guess Hawaii are the two places out there that use 92 and a quarters. I never heard of a 92 and a quarter inch stud until people like lit me up about it, talking about the 92 and 5/8. 92 and 5/8 is by far more popular across the country. That's the one that really is going to get focused in on. But yet California is 92 and a quarter inch studs. Interesting kind of take. I don't know what the inventory level of 92 and a quarter inch studs are out there. They could be quite plentiful. But here, when I look at this, it says along with the 92 and 5/8 studs continue to be the most sought after items. These are the ones that are in highest demands, right? There is no downside risk to the near future. See, people are wondering, man, can we get a better price on lumber going in the future? I don't know how you're going to do that if there's no lumber really out there to be had now, and this is where the prices are at. There's not a lot of demand. People say, oh, yeah, well, the prices will dump out when people aren't buying. It's like people aren't buying now. Like, that's the problem. That's why the mills are in curtailment. That's why we have massive inventory depletion. This is the one reason why you're going to see very little downside risk when it comes to lumber, because it can't get much lower than this without disappearing altogether, right? Which is essentially doing when the mills go into this massive curtailment like they have been over the last year. And again, this is all evidence of it, right? Mill inventories remain bleak, and there are still no signs of production ramping up. That's like, I think that's the key to it right there. There's no signs of it ramping up. And that, like, you know how long it takes to bring lumber to market? It's actually pretty quick, considering that we are a well-established, well-functioning, local, domestic in every way, like when it comes to energy, labor, all the equipment, everything is just domestically supplied. So it makes it a very efficient to bring it back online. But the longer you wait, the harder it's going to be, because most of the mill production and the forestry production comes from mom and pa type of operations. Yeah, there's some major, like, logging operations, some big names out there, but for the majority of logging operations, when it comes to the forestry of hauling and cutting and transferring those logs around, that's generally done by very small business operations. Even though they have a lot of equipment with a lot of money invested into it, it's still really just a handful of guys trying to get the job done. And then there's many of those all over the place that start to shut down if you don't have the demand for it. So we have two issues. We have, one, the demand for lumber here in the United States for building construction, and then you have the demand for trees outside of the United States, right? Because it's a huge agricultural product. I don't know how many people really think about it that way. They say, well, we can just cut down more those open up government forest lands for cutting wood. That's not the problem. And then that's not the problem. It's not the problem of finding trees. I mean, sure, I imagine some areas probably some problems finding trees, but it's not the problem of finding trees. The trees aren't the problem. It's the demand for lumber that's the problem. See, we have plenty of trees here. We don't have enough demand for trees outside of this nation to keep the logging operations fully functioning. If they're not selling trees over to some foreign land, these logging operations don't have trees to cut to sell to anybody anyway. So this is one of the major problems that people do not address. Like they say, hey, we can just open up these forest lands, these government lands and stuff for forestry, for cutting trees down. And I'm thinking, does that help? Like, how does that help? That doesn't help. That doesn't help anybody, right? And so now when you think about what it is that's really happening out here, it's because of the demand for lumber that is so low, and the mill operations don't like operating at 600 per thousand. Anything under 600 per thousand, they're like, man, this ain't gonna work. 550, they shut down, right? 600, 610, that's about as high as it gets, and like there's no demand for it. It just doesn't go any much higher than that. Not much of a change over weekly. Okay, this is the green Doug fir. Pressure continues to move narrows up and try to skirt the increase by shifting to lower grades. Yeah. There seems to be talk of larger swings than 1530 reported, but the little evidence has supported higher prices and have stuck. Over the coming weeks, leaning into the warmer weather, we're most likely to see an increase continue as supply becomes tighter. Make sure to buy ahead. Yep. So in pretty much every single region, we're having either lagging in time of delivery. That's what's happening over in the East. They're not exactly experiencing shortages or inventory depletions to the level of what it is that we are finding over on the western side of the nation. But it doesn't mean that it's not having issues over there, considering how far out the lumber packages are now, the lead times on these lumber orders are getting. So this is like, to me, this is the huge sign of what it is that's actually happening within the economy. Like if anybody ever was to look at any kind of industry out there that is showing signs of a good economic activity, it would be within the building industries. Like if you're selling a lot of lumber, if you're putting a lot of structures together, if there's a lot of demand for the building industry itself, then you have probably a fairly decent economy that is operating at the same time. Like those two go hand in hand. When I look at what's happening within the lumber industry, screaming recession. Just screams recession in every way, shape, or form. Like if you were to go and look at a recession, you would probably see these same mills reporting on the same things that they're doing right now. But many people don't necessarily see the recession inside of a actual recession like the way that we have always seen recessions. It's because we kind of experienced something that I have coined a recessionless recession. And now I know a lot of people might say that's a cop-out statement, but I was very accurate in the description of what a recessionless recession was. And this is exactly what we are experiencing here. A lot of people got laid off from their high-class zombie corporate job, whatever the hell that was. And they ended up having to go to work flipping burgers. And now they may not be a good job, but it's a job. And if it's a job, you're not unemployed. And if you're not unemployed, then you're not part of the recessionary pressures that are now inflicting the entire economy out there, not realizing that that loss of pay is really what's dragging the entire economy down. But you're working, so the numbers show that you're employed. That's why we don't have a recession. It's because it's a recessionless recession. Same with the corporations. They already got bailed out. They got bailed out ahead of time, so they don't need to bail them out again. All they have to do is just adjust the inflation expectations. That's a whole other story. Anyway, I wanted to report on this stuff because it's been a while since I've actually busted out one of these lumber newsletters for you guys. This is the stuff that is really going to give you the heads up that you need. Anybody who is into building, anybody who is into a project that's going to be taking place here in the near future, anybody who is in this game at all, even real estate agents or mortgage brokers or any of those people, having a better understanding of what is taking place within the building industry is going to give you a much better understanding of what is happening within the real estate market. I love listening to the Crash Bros now. I really do, because they talk about some of the most delusional stuff I have ever seen. They don't really do any kind of real investigations that I have seen. They really take ideas and expectations from the past and try to overlay them on what it is that's happening now, and never really diving into the situation that we now face with the Cantillon effect that's separating the rich from the poor, and the asset holders are the ones who are going to win going into the future. And if you think about it, the asset holders are property owners. That's really what it comes down to. And so when the people think, man, how is it that I'm going to be able to afford a house? How is it that I'm going to be able to, be able to live out that American dream like I once had? Well, one of the ways you can do it is by understanding the situation that is making it so difficult. All right. So you don't have to ask the question on how it is that it's going to happen. You can understand why it is that it's making it so difficult. And once you understand why it's being so difficult, and it's like a lot of people, I know why it's difficult. It's the government who's doing it to me. Well, that's cool. All right. So you can take that scenario, belief, and run with it and see how well it gets you. I'm not sure where you're going to go with that. But anyway, the government ain't going to change. But I look out there and I think to myself, there are people who are killing it right now, right? I mean, there's people out there who are doing it right now and they're making it. Well, that's pretty interesting to think that nobody can make it nowadays, but then there's some people out there who defy that and just go and make it anyway. So now I think to myself, what is it that they got going on that makes them so special comparatively to everybody else out there? Well, for one, they don't believe that they are being held back because they are on their way and they are moving. So the people who are saying, man, the government is the reason why this sucks, is the reason why it sucks, right? It's because they are blaming the government for it instead of looking at it in a way that says, well, there's some people out there who might be killing it. How are they doing it? And then if you go and you look, well, they're criminal behaviors. Well, then you're back into sucking again, right? All right. 15 minutes into it, 16 minutes into the live stream. We got $2.99 coming from T Flats 123. Thank you so much for that super sticker and the support for the channel. You guys are so awesome with that. Miss Deja with Jeff NFL draft coming up. And All Nighter says, I believe that the latest numbers will be revised negatively. Yeah, and I agree with that. Like, in fact, I should go back. It's somewhere. I'll go and find it one day. There's actually a Federal Reserve speech that I have found that talks about that exact thing. Like that particular, I think it was, well, maybe it was Williams. I can't remember. I'm going to go and try and find it, that Fed speech. That's a good one. Where they literally, like, he says it right in the speech. He was just like, I do not trust these. Like, he didn't say it in I do not trust. He says, I look to the revised numbers because they essentially, the ones that we are getting right now will be revised down. And so when I heard that and I thought about it, and in fact, Michelle Bowman brought it up too in one of her speeches, like not even the Federal Reserve trusts those numbers. They wait, like the numbers come out and everybody says, oh, look at the unemployment numbers. What is the Fed going to do? And then the Fed is just like, oh, that number doesn't really matter. That's just the one for you guys to look at. The real number is going to be the revised one later on. And since we can't trust this number, I'm not going to. And it's kind of funny how everybody in the entire world focuses in on that, but yet the Federal Reserve straight up says we don't. Like, like they don't come out and say it to the public, but they do say it in those speeches. I'm going to go and find that. That would be a good one to bring up again. 122 people watching. Be sure to hit that like button. By hitting that like button, we're going to get more people to join in on this live stream video talking about the building industry, construction, and what is going to be taking place going into the future. If you don't have new construction happening, you're going to have a very difficult time finding a crashing housing market. See, that was one of the big things that was happening back in the great financial crisis, is that there was this massive build taking place right before it happened, right? All these projects that were coming online, like all these things coming into fruition that to meet a demand that should never have existed. Like none of that stuff should have been there at the time, but it did, and it was, and that was what was occurring. And so when the moment came that all the people who had the toxic mortgages that don't exist today, right, the moment that they weren't going to pay, all those projects that were coming into fruition, like all the ones that were in motion essentially, or just coming online or coming on the market, were worthless, useless, couldn't, I mean, it was like, here you had this huge crashing mortgage market, and there was no way that all these new homes that were just coming into existence were ever going to sell. That is way different from anything that we are experiencing now. We have been in a building recession for quite some time. It has been like month after month, well, maybe not month after month, but it has definitely been year after year since the peak of the COVID that we've had dropping building taking place. Less building permit issuance, less building starts. It's just been getting less and less and less every single month. Maybe not every month, but every year. And so when I think about that, how negative of a building situation we are in, how negative the inventory is, how depleted and curtailed the mills are, how even the logging operations that I know that a lot of them had shut down a few years ago because of all this taking place. Like, how do you bring that back? Boom, right? Well, once you do ramp up production, when it happens for whatever magical, super magical moment in the future, where all of a sudden the economy finds itself far less restricted than anybody had ever given it consideration for, and you find this demand for construction starting to pick up because of all the economic activity that's happening out there, and they go to start making their lumber orders to find that the lumber is not there, and they've already signed contract. That's inelastic demand. What happens? Right? You got inelastic demand. Here, I signed this contract. I promise to build you a house and I'll have it done by so many months into the future. Go ahead, sign here. Sign right there. You got, boom. Okay, let's get this thing started. I like in my lumber package. No lumber? Uh-oh. That's a bad thing. Right? Time is money. And lumber is money. And lumber is distance and heavy and it's hard to get. And if it's gone, now what? Right? And what's funny about it is that it's not the lumber price that's the problem, it's the availability. I've always said that. I don't know how many people like look at it and say, well, lumber, how much could it possibly be to cause for a house or whatever, or driving up the price? And I'm like, it's not the lumber price that's the problem, right? I mean, it is a problem in a lot of ways, but it's the availability of it. That is the problem. I mean, like an entire lumber package for a house, I mean, you could adjust the lumber package offset by, changing the cabinets and flooring and window coverings and stuff like that. That stuff would probably be much more than the lumber package of the entire house. But if you can't get the lumber, that's it. You're done. There's nothing else to do. You can have different siding, different windows, different all kinds of stuff to put on the house. But if you don't have the lumber, you don't have anything. You don't have an electrician or a plumber or any kind of site, nothing, right? It's all got to start with the framing, and the framing is the most important part. Everything else can be different, right? You can have metal siding, or you can have fiber cement siding, you can have cedar siding, you can have asphalt shingles, you can have metal shingles, you can have, there's so many different ways that you can piece together houses, but the framing, that's it. There's only one shot at that, right? And what I love about this is that people will always say something about like, well, that's why we're going to do 3D printing. That's why we're going to do all this. And they start listing off all these wonderful ideas of what it is that we're going to do for the building industry going into the future. And I have to ask the question is like, if that was efficient, why aren't they doing it? Because lumber is by far the most efficient way of doing a house. Now, I know a lot of people don't agree with it and they don't like the idea of it. And if there was a better way that was more profitable, it would be taking place, I guarantee you. But nothing can be distributed as fast as easy and build a house as quickly and as awesome as the United States is doing it. And many people will disagree again by saying, well, just look at D.R. Horton and all these horrible houses that they're building. And well, those are coming from big time nationwide construction outfits. Go find yourself a good quality builder, right? Go get Old Nighter to do it for you. You won't have a shoddy house. And these are the things that we have to think about and understand when we find the changes start to happen. Because I guarantee you, it's going to be like so many people are going to scream greed and manipulation. They are going to do that. Why suffer the consequences of falling into that mindset? Like people will right now think that this is a greed and manipulation thing that is happening. And I'm thinking to myself, no way in the world, all right? There is no logging outfit that's going to shut themselves down on purpose so that they could just prove that they can get a better price for their service of cutting trees and hauling them off the hill. All right, that doesn't make sense. Loggers want to log. They want to cut as many trees and haul as many trees and cut and do that. That's what they want to do. All right. Same thing with mill operations. They want to produce lumber. They don't want to curtail. They don't want to like shut down the lights, send everybody home, lay people off, and say, hey, maybe at some point when the prices come back up, we can fire things back up. They don't want to do that. They want to produce lumber. They want to sell lots of lumber, right? If you're not doing transactions, you're not getting paid. People who say, oh, they just want to, hold back on it and drive the prices up. Well, yeah, they do want the prices up. They do want to cut back and drive the prices up so they can eat and profit and then, do the thing, do the business. Like, why is it that people have a problem with profit? I don't get it. Right? Why would you go to work if you're not going to profit? Hey, even people now are saying, I don't profit enough. And then they complain about corporations profiting. And I'm thinking to myself, that's how this works, right? That's how it works. These people need to cut the lumber and make money at it. If they can't make money at it, they're going to say, sorry, find somebody else who can do it and make money. And then people will get mad. How come you don't produce the lumber? It's just like, all right. So once we understand that it is about profit, everything is, always has been, always will be. And it's not about greed and manipulation. It's about being in a position in which that you're just not going to show up for work if you're not going to get paid enough. I mean, that seems reasonable, right? And same thing with the mill operations. So right now, when they're operating at 600 per thousand and they're barely cutting and it gets down to 550 and they're like, I'm out, right? They bail out of there. That doesn't have a whole lot of room for profit, nor does it give them a whole lot of encouragement to ramp up inventory. These two things have been taking place for quite some time. Now, if we find that economy moving into a position in which that it is far less restricted than people are giving it consideration for, all of a sudden wars go away, tariffs go away, or less concerning, or just stop getting talked about, and then you get Fed independence getting cleared up, you might find that the people who are out there within the economy find that very, very encouraging, and they find that the neutral interest rate is much closer to the Fed funds rate, making the economy far less restricted based on all that inflation expectation that they had experienced over the previous 6 months. Like, I'm not trying to predict it. I'm just saying, man, this is leading up for something that could be very well just like that. Otherwise, these guys aren't going to produce. And you're going to find even more mill curtailments and shutdowns and even more inventory depletion going into the future. If things don't change at some point and the demand picks up and the prices pick up, and I mean like real demand, like people saying, no, I am taking possession of this lumber so that I can build this house. This is inelastic demand. That's the demand I'm talking about. When that happens, it's going to be on, all right? It's only a matter of time. All right, 27 minutes into it. The great deflation comes after the great inflation. To get the dog off the porch, throw a bone in the yard. Good morning from South Korea. I was just watching your silver video. How much is enough? AI educator, that is a really good question. Somebody else asked me that, and I couldn't tell you. For the average person out there, I always said, just to throw a number out there, that you should have 100 ounces for everybody in the family. Now, I don't know where that came from. That's not a real number for any kind of thing, but I guess it was a goal for me at one time. Like, that's kind of the idea that I had. And so for no other reason than I can think of, 100 ounces seems like it's a reasonable amount for somebody to have for a goal for each person, like no less than 100 ounces. All right. After that, as much as you can get, all right, as much as you can stack up. But I wouldn't suggest anything less than 100 ounces per person. And that's what the idea of carrying it to the other side too, right? Not for protection from survival purposes or whatever. That's like your insurance policy onward. It's not that much. Right? I mean, it's a lot. It's a lot of money. I mean, don't get me wrong, it's a lot of money for anybody, but it's not that much. Like 100 ounces is achievable. That's something that just about anybody could do. Dollar cost averaging, so long as something crazy doesn't happen and it just explodes in price in the next, couple of years, people can work it. Like, if you were dedicated to the outcome, you could piece yourself together 100 ounces over the next couple of years. Yeah. Just make it a goal once a week. Once every other week, get 1 ounce and just make it your goal, like whatever it takes to get there. And then, once you're there, you're going to feel a lot more comfortable, because I assure you, once you start getting it, well, something really funny starts to happen. When you start piecing it together, the first couple are really hard. They take a lot. It takes a lot out of you to go and take the money out of the bank and go down and get the metal or whatever. But as time goes on and you start stacking it up, it gets easier to stack, and it actually starts showing up in ways that you never really have expected it. Just all of a sudden, it's like people are like, "Oh, hey man, I had this silver sitting around. Thought of you, man. You can just have it." Like literally, people will just like, "No, it's been sitting around for a while, and I figured, man, if anybody deserves it, somebody who really wants it. Here you go." And they'll literally just give it to you at times. Like I've had people do that for me, and I've seen it happen to other people. In fact, it just recently happened to a friend of mine, and it was quite extreme what he was handed. I was just like, whoa, man, if this thing is real, all right? Because essentially it was a rare coin, and how it ended up in his possession is just the most bizarre story. I don't want to get into it because it's not my story to tell. But I mean, just the idea behind it, it was just like, man, the way that people acquire things in their life, it seems to be like almost as if it was like destined to be in their possession or something. So, once you start in that path of accumulating silver, it just makes it easier to get it. All right, moving back into lumber. All right. Vermilion Enterprises on YouTube is the most honest bullion guy around. All right. Good goal, 100 ounces. Yeah. Exactly. I also think silver, you don't own enough. No. It was really cool, Jeff. More expensive, but left little room for error since I can't afford master farmers. They are in debt. They need new lender to help them more debt. If they can't get new debt, then USA would be in default. I mean, I'm pretty sure, like, if you were to really look at it, the United States has essentially been in default for quite some time. Like like all the debt is paid with more debt. There's never paying any of the debt off. And this is really where like the problem is going to get like really bad going into the future. This is what Jerome Powell was essentially warning us about, and needs something to happen here in the future where we have a pretty dramatic shift in the way things are handled. I don't know what the government plans on doing about their unsustainable debt path that they're on. But the moment that the new money turns off, everybody falls into pain and misery. Now, that part right there, like not everybody, there's a handful that won't, but most people, almost everybody will fall into pain and misery. I don't know how that would look. I don't know what it is that the people would behave like, and I certainly don't know how it is that the government could operate, because with that collapse happening, nobody's getting paid. There is no government. There's no soldiers. There's no, like, police officers, none of that stuff, right? Because the entire system has completely collapsed on us. Now, I can't imagine that being the case. I just can't. Like, could it happen? Sure, but nah, it's probably not going to go down like that. It's most likely going to end up going down in a digital currency, stable coin. Most likely going to happen with the Federal Reserve buying the debt of foreign nations. Like that's the kind of thing that I see happening, because they're going to have to continue to expand the liquidity, right? Essentially the liabilities of the Federal Reserve, in order to cover the dollar-denominated debt that exists outside of the United States, but at the same time not send the United States on an unsustainable debt path. Like these things don't drive together. So that's not going to happen. Like not the buying of the United States debt to provide the world with the liquidity. The Fed is going to have to buy something. What is it? Well, they have already talked about having this huge scope of operations of the globe and buying the sovereign debt of a foreign nation. Well, once you buy the debt of a sovereign nation, you're leaving the United States behind. And like, sorry, United States, your unsustainable debt path, you guys are out. We're buying the nation, we're buying these nations over here. We're buying their debt, putting that on the balance sheet and issuing out digital dollars, essentially a stable coin of some sort. Maybe right into that nation or something. I don't know how that's going to work. But they're building up the system for it now, the Genius Act and all that. I mean, it's not like it ain't happening. So The collapse, the inevitable collapse, I don't think that's right around the corner. I think that they are building up the systems in order to take the economy and the people and the financing into negative territory. Like, I don't know how quickly that'll happen, but I think they're building that up now. All right, ETFs are paper contracts. Who do you trust? Hey Benny, what's happening? I don't really trust a whole lot out there. Yeah. But I think that's really the better way to do it. Is just like, it's not a matter of trusting or not trusting. It's like believing more in what it is that you have for your decision. Like, if you put a lot of faith and expectation on other people to perform, then you can almost expect to be disappointed. Like, it's like setting yourself up to be disappointed by, like, no, I really had a lot of hopes and dreams and expectations for these people to perform in a particular way. And then when they didn't do it, it broke your heart, right? You didn't get paid, they left you, whatever happened, right? I mean, but that was the problem. It was putting the expectation out there on them. You should never have done that to begin with. And that's really where that trust comes in. I'm going to trust you to perform, right? And then if they don't perform, it breaks your heart. Or you broken in debt, or whatever happens. That is very difficult because you almost have to rely on other people, and this is really where building up that good network comes from. So you go and you find people who are already people who are trustworthy to begin with, right? This is you don't have to hope that they're going to be trustworthy. You know that they are. They've built themselves up to be a trustworthy person, and the profession that they are doing is obvious with their skill sets and everything they have going on, that's the direction in which that you want to go and you want to be with. So understanding that part of things, right? You have to be in it, and then not be like. See, here's the thing. Like, here's a good example of it. When I was building this channel up, I had a really good partner for a while, and she was like, it was awesome. We worked together for our day job, and we were communicating well for the channel, and everything was going great. And she's like, hey, I'm going to take off to the other side of the nation. I'm going to start some schooling, but I really want to continue on with this. And I was just like, hey, that's great. I mean, it would be better if you were here. That way we could, work this thing. But it doesn't have to happen that way. You can take off to the other side of the nation. We can do this remotely from however it's going to work. Everything worked out really well in the very beginning, right? But then life gets in the way, right? And she got busy, school got in the way, career got in the way, and she didn't have time for the YouTube channel anymore. And I totally get it. And she, like, as much as I think she really wanted to, she just couldn't keep up with it, right? And couldn't put her heart into it. So I tried to find replacements. I could never quite find anybody who was doing it like she was. She just took it off and just ran on her own. Like, it was just like, wow, this is amazing. Like, she had as much fun doing some of the logistics and building up some of the, like the Teesprings and the website and doing stuff like that. She was just doing it. She was just having fun and just really enjoying the learning and just the path that she was on with it. And I was just letting it go. It was just like, hey man, this is cool as hell. What a great, time we're having here. But then when that broke and the energy broke with it, I could never find anybody to do it the same way. And I'm putting too much expectations on other people to do that instead of putting it on myself to take care of it from the very beginning. I put this expectation on her. It was just like, or even allowed it. It was just like, yeah, go for it. And then when it was gone, it was just like, shit, right? And then I was never able to put that back onto somebody else. And I thought, man, that's my problem right there. I should never have put the expectation on anybody else. I should have had that on myself the entire time. All right, moving on. Did I have another super chat up there? Let's go check that out. All right, $7.99 from T Flats. To change the U.S. bonds real quick, how does the Fed just step in and buy U.S. bonds? Isn't that just the U.S. eating its own tail in a way? Yeah, and that's not what happens, because that would be technically monetizing the debt, and that's not what the Federal Reserve is allowed. Essentially, their charter doesn't allow them to do it that way. So the Federal Reserve has to buy stuff that has already been purchased, right? So they're buying stuff off the secondary market. So who buys the bonds is the primary dealers. Now, the primary dealers are like the big banks, JP Morgan, Goldman Sachs, those type of people. So the primary dealers, they're the ones who go to auction, they buy the bonds. The Federal Reserve, they buy them from the primary dealers. So so they're like a customer, like all the rest of the people out there buying bonds. That is technically is the way that that keeps them from like monetizing the debt, specifically. But excuse me. But if the big banks know that they're just going to sell them to the Federal Reserve, and so they're just kind of acting as a middleman, it's essentially monetizing the debt, especially something like quantitative easing. Like that's like straight up monetizing the debt, where you're going to buy treasury bonds and put them on the balance sheet. Even though you're buying them through the primary dealers, it's still that's exactly what it is that's happening. See, the Federal Reserve isn't allowed to interfere in the stock market either, right? They're not supposed to be buying stocks and putting that on their balance sheet. So what they do is they lend money to banks who then use the stocks as collateral, and the Federal Reserve is like, okay, well, that's cool, So it's just like, oh, wait a minute here, this is the same thing, right? I mean, you're supporting the stock market through the lending of this money to a bank that's using it as collateral. It's just like that. Like when people say like, the Federal Reserve is buying into the stock market, it's like, no, they're not. That's what they're doing. Right? It is not the same thing, but it's essentially the same thing for when, all intent and purposes of it. Mailbox was full today. Sorry, all-nighter hider. Oh. You guys messaging. Are we moving into two different trade groups, north versus east? I don't know. I mean, I would still assume that the United States is the biggest consumer out there, and there's no nation out there that's going to consume as much as the United States is going to consume. So, I mean, at the end of the day, everybody's trying to get it to the United States, right? Even though that may not be the case necessarily today with everybody's attitude, but that's really like, who else is going to be a consumer like the United States? Nobody, really. It's really safe streets now, mailbox. I know that I am loved. All right. Does anyone believe the jobs numbers? No. Nobody believes the jobs numbers, but it's not a matter of believing the jobs numbers. Like, I don't know, maybe it's important to somebody else. What's important to me is how the Federal Reserve looks at those job numbers. Because that is like, the jobs numbers suck, right? The reality is it sucks. It's not good. Now that I've set that aside, how is it that the Federal Reserve is looking at it? Because I'm trying to understand their monetary policy. And that's the reason why I set it aside and say, regardless of what it is, it doesn't really matter, because we're not trying to figure out what the reality of that is. I mean, maybe some people are. I know it sucks, right? The reality is it's not good. And I don't have to know exactly how not good it is. I just know it's not good. Point being is that the Federal Reserve is looking at low unemployment numbers for their monetary policy, which is going to keep them in a position in which that they don't feel like they have to move in order to try and support jobs. Whether they should or shouldn't is maybe another question in it. But the reality is that they are looking at low unemployment, and that's not a concern for them, right? And that's it. And that's really what it comes down to, because what the reality is, it sucks. Now, are they going to do anything about the reality of it being sucky? No, they're going to look at their number and say, hey, it's low unemployment. We aren't concerned. That's it, right? Moving down. Well, historically, really good job numbers, which we supposedly would make it hard for the Fed to justify a rate cut. But Trump still wants Fed to cut rates. Okay, now, Jeff, I'm going to get into this a little deeper, and I know this is going to get really this is some very deep esoteric way of looking at the monetary policy and understanding it. You're right. There was a time when good job numbers would have supported the economy, right? It would have supported inflation. It would have caused things to then ramp up, and the Federal Reserve would have been forced to raise rates to slow that down. When the economy fell and the jobs numbers would fall, the Federal Reserve would lower interest rates. People would then get hired, right? A lot of people would look, okay, they would borrow money to go out there and just spend it. But no, really, when the Federal Reserve was lowering interest rates, they were trying to get people to go back to work. Corporations would invest in their companies and hire people. When the people went back to work, the inflationary pressures would be found again. This would be supporting the economy. So the Federal Reserve was adjusting interest rates to adjust the amount of employment that was taking place. They actually had something called the neutral employment rate that was neither causing or restricting inflationary pressures. It was neutral, right? So when the Federal Reserve would look at the jobs numbers, it was incredibly important because these jobs numbers increasing would mean that there was going to be more consumption, aggregate demand, inflation, all those things that came from it. Today, that doesn't happen anymore. It doesn't happen like that anymore. You can have historically low unemployment, everybody working, but it doesn't create the inflationary pressures that the Federal Reserve would be typically looking for. I know I have a lot of people will push back against that. It's not me who says it. It's the Fed who said it. Jerome Powell said it just the other day when he did that Q&A at Harvard. Right? And he said it straight up. It was just like we ran 15 years puzzling the professionals on where the inflationary pressures were. That was the Federal Reserve operating at the lower bound of zero. Interest rates were down. Everybody was working and there was no inflation. That was a broken monetary system. It failed. Okay. Now, right now, we are sitting in a position in which that the Federal Reserve has an elevated Fed funds rate. Now, many people will look at this as being restrictive, much like Donald Trump. We need to lower these rates, right? Need to lower the Fed funds rate and take it to, zero, whatever. I don't know if he has an exact number, but we need to lower them and lower them a lot. Now, the Federal Reserve has an elevated Fed funds rate because the inflationary pressures that we are facing. Not so much worried about the unemployment, right? Unemployment is still historically low, but the inflationary pressures are kicking in. Right? COVID, war, Ukraine, tariffs, whatever, it's just like all kinds of stuff out there that creates this inflationary pressure. Now, something very interesting starts to happen if you have an elevated Fed funds rate and an inflationary pressure that starts to build up as it starts pulling the neutral interest rate higher. Okay? When that neutral interest rate moves ever closer to the Fed funds rate, the economy becomes far less restricted than anybody would have ever given a consideration for, and you find this resilient consumer up at the top 10, 20% of household incomes. That's where the Fed is focused, not so much on the jobs anymore because we don't go out and spend like we used to. That was proven with the low unemployment. Everybody was working. There was no inflation. Who's spending the money? The top 10, 20% of household incomes. Just go and Google it yourself, right? Top 10% do 50% of the consumption. Do you would think that the next 10% after the first 10% would probably be doing an additional 50% of the remaining consumption? That leaves the top 20% of household incomes doing about 75% of the consumption. 80% of the people do the remaining 25% of the consumption. The bottom 50% of the people, how much do you think they could ever possibly consume comparatively to the top 10? Nothing. They're insignificant. They do not matter. So now we have an economy that used to have the working class people be the backbone. They were the ones who would go out and spend. When they got jobs, they went to work, they increased the aggregate demand, and that's where the inflationary pressures was found. They aren't important anymore. They're out the game. So now, if we can look past the inflation, can we? Is that possible? I don't know. Inflation expectations pretty heavy. These wars are never going to end. The tariffs are going to get worse. The Fed independence is coming to, it's very questionable, and we keep pushing this stuff out there. Do we have any expectation that you can see through the inflation? Is that possible? If you can't, then you won't be able to see what Trump is seeing. You will not be able to see what Myron's seeing. You will not be able to see what a lot of the Federal Reserve is seeing because you can't get past the inflation. This is what he is looking at. This is the reason why he wants the Federal Reserve to take interest rates as low as possible now. It's because he's looking past the inflation. The Federal Reserve has a lag to their monetary policy. The moment that they adjust rates, it takes 6 months to a year, maybe even a year and a half before it starts to impact the economy. If the inflation is gone in 6 months, from now, for whatever reason, if it was gone, the interest rate adjustment would have to take place today in order to deal with it in 6 months. If you adjust the rates in 6 months, it'll be 6 months to a year, maybe even a year and a half down the road before it starts to impact the economy. If Donald Trump is looking past the inflation, then he is saying that the Federal Reserve should lower interest rates now to get past that inflation so they will be at the moment of time. Does that make sense? So when the inflation is gone, the Federal Reserve will be right in the right position at the time that it is gone. That's the only way that I could see how Donald Trump would have any logic in it. This would make sense because the real interest rate, the R star neutral interest rate, the interest rate that is neither accommodating nor restricting the economy when the Federal Reserve is or the economy is operating at its potential alongside that low and stable inflation, R star is really close to zero. 1.5%, somewhere in there. So if the Federal Reserve was to take their Fed funds rate to 1.5% now, 6 months to a year down the road, it'll start to impact the economy. If the inflation can be seen through, like, hey, we're going to get through this inflation and then it'll all be behind us again, the Federal Reserve will be timed perfectly for that. This is the only reason why I could see Donald Trump would want to lower interest rates or want the Federal Reserve to lower interest rates. Other than that, it just doesn't make any sense. I don't know how many people can see it this way, but this is how the Federal Reserve has communicated it out there. I don't know if Donald Trump really believes that he can see through the inflation so that the Fed funds rate could be at R star ahead of that, but knowing that it's a 6 months to a year down the road for the lag to kick in. All that would make sense to me. It would also make sense to me that the Federal Reserve would want to maintain elevated Fed funds rate and just keep pushing inflation expectations. Never letting the expectation fall. Just bring up another problem, bring up another issue, one series after another, boom, boom, boom. Just make, like, whatever has to happen, just keep the inflationary expectations going. Because if you do that, then you can pile that inflation expectation on top of R star and make the economy less restricted. The Federal Reserve can just sit there and just like aim back and just like, hey man, you need more monetary stimulus? Just scream out something in inflation, man. Just Donald Trump, just here, give me your beer, man. Go out there and grab the mic. Go do your thing, right? And then create the inflationary expectations and ease the economic conditions for the top 10, 20% of household incomes. To me, this is pretty obvious. I know it's hard to understand it. If you've been following the Uneducated Economist for the last, 5 years, and it totally makes sense to you too. But brand new to try and understand what it is that I've just tried to communicate here in the last 5-10 minutes, make your head spin. How is anybody supposed to understand that stuff if they never heard it before? R star neutral interest rates and inflation expectations easing the economy. It would be complete lunacy for most people to hear. But once you see it, it's just like, God damn, dude, that's dialed in, isn't it? Damn right it is. And it's not because I'm some fancy discovery. I just read this damn speeches so many times. And they talk about it in there, relentlessly. All right, inflationary expectations make way later for deflation for the top 20 to buy all the assets up. The rich get richer. The rich will always get richer in an ever-increasing money currency system. There is very little doubt in my mind. People are like, oh man, the rich just keep getting richer. And it was just like, well, they keep dumping all that money in. You keep saying the government should just. Maybe if you didn't say the government should just, we wouldn't have the people getting richer. They would just get not richer, if you just didn't do that. But everybody just begs the government to do something, and then a whole bunch of new money comes pouring into the system, and then they complain about that, Okay. All I guess I'm getting, I don't like the rich getting richer and the poor getting poorer. I do not like that. There's nothing I can do to change it. It's called the Cantillon effect. And if you inject new money into the system, that's exactly what you should expect from it. And to expect anything else is, is delusional. It's artistic fantasies, pure imagination to believe anything else. All right. We have seen changes in people economic thinking just on the promise of a rate cut. So I don't think it's necessarily takes 6 months to a year for the rate cut to have an effect. No, you're wrong. It does take 6 months to a year for it to have the financial impact on the economy from that interest rate adjustments. The markets act immediately. That is not the same thing, right? Markets are not the economy. The Dow is not the economy, right? That's probably one of the furthest things to look at for economic activity is to look at the markets, right? The market's expectations and their reactions to the words and sentences are not the economy, right? That's not it. The economy is something that takes very long and slow and grinding. You know, this is why I find it so it's so interesting to actually watch it happen. When they adjust rates, think about this. When they adjust rates a lot, how long does it take for the people to actually participate in the rate adjustment? You see what I'm saying? It's just like, hey, you lowered mortgages from 6% down to 3%. There's going to be a flood of people who run out there to go get a mortgage, right? Well, what if you only did it for a couple of months? How many people within that couple of months would have actually had the advantage of being able to get that mortgage at that low rate? It would have been a lot, right? Would that have a very big impact on the overall economy just to have a couple of months of that? Probably significant to be noticed, but in the grand scheme of things, it's only the handful of people who got the opportunity to do that. If that stuck around for years, the amount of people who get to participate in that low interest rates is now quite broad. This is why it takes time for it to get into the economy. You lower interest rates today, it's only a handful of people who are going to take advantage of those rates who get a first shot at it. The longer they stay lower, the more people participate in it, the more economic activity you have as an occurrence of it. That takes time, and it takes a while. Even the decision to get a loan takes a while to even get the loan. I mean, unless you're like, super rich and you're buying a car and you want to do it instantaneously. But most people, when they're buying a house, have to go through like a very long process of getting there. And so when you think about how it is that the interest rate adjustment and how it impacts the economy is really a lag period to it, because people have to participate in the economy with that lower interest rate, and it has to get broad. Many people have to do it. Just because you lower it doesn't mean that it's all of a sudden, hey man, we got all this economic activity as an occurrence of it. You might have a lot of market activity that might show up as economic activity for a lot of people to see it, but really the economic activity is the decision making that people are doing with that low interest rate, and how many are actually doing that, what projects, how massive are those projects. So it's important to distinguish the difference between the two. Do not look at the markets as the economy. That's where I think I know I used to, and I would be very confused about what it is that's happening and trying to understand monetary policy and all this other stuff. Oh man, the Fed's just trying to create, support for the markets and stuff like that. I used to say stuff like that. I could not find any evidence of that other than maybe the idea of loaning the banks money and using them as collateral. Like that kind of thing does happen, but that's been occurring for quite some time, and that isn't new. And we can go and we can complain about that some more, but the idea of it being something that is like, look at this crazy thing that they're doing right now. It's just like, they've always done that kind of, well, they haven't probably always, but it's pretty much been an issue since the Federal Reserve's existence. It's one of the reasons why the discount window even became such a, had such a stigma attached to it, is because the banks used to go to the discount window, borrow a bunch of money, and then go dump it into the stock market. And so they essentially just put this big stigma on the discount window, and the banks wouldn't want to touch it because if you were over there at the discount window, it meant that you were in bad shape, right? So it's not like these banks haven't been playing that game for a very long time. Did I get another super chat? Let's go check it out. Yes, I did, from T Flats. Thank you so much. $30. Thank you, UE. Needed that inflation expectations. Yeah. It really is. Once you, for me, I wasn't, I used to try and find the answers. Couldn't we have a better monetary system? And then I would try and figure out what it is would be the best monetary system we could have. And then, what is it that we could have for an economy? How can the government, behave and create this, awesomeness for everybody. And I tried to think of like, how could we do this? And it was very frustrating and very difficult. And I could never find any kind of answers for it. So instead, what I did was I looked at gold and said, why isn't it being used? Why, like, what is the limitations here? Why is it that we are not using this now? And when I found people saying, well, it's because the government wants to control you. They don't want you to have it. They want, they want it for themselves and all this other stuff. And I'm thinking, that doesn't seem exactly right, because I can go and get gold right now. So if they didn't want me to have it, then that's not right, because I have it right now. So that didn't make any sense to me. And I was just like, I'm not going to go with that. Government doesn't want you to have it. I have it. Right. So I started diving deeper into it, and I started realizing, no, this is different. This had more to do with the ever expansion of the fiat currency. And now, why was the expansion of the fiat currency? Oh, they want to manipulate and control you. And I dove deeper into it, and I'm like, that's not exactly right either. They were essentially providing the ability to do transactions. That's what it really came down to. People wanted to do transactions. They didn't have enough gold. And the United States was like, well, we can help you out with that. You guys want to do transactions? Yeah, here's some money, right? Go do transactions. What do you think? Yeah, it's just like, well, money, huh? This is not money. This is currency. This is paper. And it's just like, well, it's as good as money. You can trade in, a certain amount of it for a certain amount of gold. No worries. Same thing. Hey, you want some more? We promise we won't print too much. Go for it, right? People are all like, oh, doesn't sound right. And I was just like, did you want to do the transactions or not? Give it back. No, we want to do transactions. Give us some more. And that's what happened. And then they did all these transactions, and then they started complaining about the government printing too much. And I was just like, oh, which one did you want? All right? Did you want to suffer in misery without doing transactions, or did you want to do transactions? Which one? All right? Because that was the choice to be made. And everybody says, well, we want to do transactions, so give us the money. All right? Give us the currency. Print up the money. Let's do it. And then they accepted it. And they didn't have to, but they did. Yeah. And that's why I look back on it and it was just like, man, you telling me that we had an opportunity to just tell people, no, I don't accept Federal Reserve notes and I only accept silver certificates and gold certificates and coinage. We had an opportunity to do that and we didn't do it. Why didn't we do it? Oh, because we wanted to do transactions and eat. So we just recognized the Federal Reserve note as if it was money like all the rest of the currencies out there and believed that it was money. And then we ended up in a currency system that was fiat with no actual money in it, and people want to complain about it. Thinking, well, what was I to do? I wasn't there to make the decision. By the time I was born, Nixon had already done his thing. All right, transactions of Ponzi schemes, perfect heist. It kind of really was, It really was. Hello, Professor. Love your commentary. Don't like the AI slop thumbnails. Oh, thanks. Yeah, appreciate it. Yeah, I really don't either. But the other ones, I think, are getting kind of lost into the mix. And so I thought I would just change it up with some AI thumbnails like that. Yeah, I'm not real pleased with them either. It kind of works sometimes, though. What do you do? Yeah. See, it's funny, like I could put out very descriptive, very very informative titles and ideas and stuff like that, and nobody will watch them. Nobody likes it. If you put out something that's going to be like, oh man, housing market crashes, the whole world's coming to an end, you're going to die tomorrow, something of that nature, and the videos take right off. In fact, one of the first times I ever realized that is somebody had commented on a video that I had done, tomorrow the stock market crashes and everybody dies. And so I laughed at that and I took that and I made it the title of the next video that I had done, and it blew up, man. I got like 30,000 views on it. It was the first time I had a video get like that many views. And it was then that I learned, man, if you put some scary titles together, then you're going to get some attention. The only problem with it is that if you do it every single time, it's kind of like crying wolf or whatever, and people just kind of get used to it. And then they call you a fearmonger and all that other stuff. And I'm thinking, well, it's not the videos that I did that way. It was just the titles and the thumbnails to get your attention, so you click on the thing. Otherwise, nobody wants to sit around watching some boring, informative video. Yeah. Unless you're the uneducated economist crew. We're sitting around, we like sitting around going through the boring stuff. All right, you're going to die in 5 minutes unless you watch. That's a good one, Larry. All right. Make it like a chain letter, you know. It's just like if you don't send this video to 10 people, you know, you're gonna have bad luck for the rest of your life. All right. All right. Unfortunately, you got to go with the times or get left behind, and fancy or thumbnails get more clicks. It really does. And you guys know, I mean, I don't like my videos are consistent. I'm consistent. I feel like I'm consistent with my theories, my strategies, my ideas, everything that I come up with information. I don't hop all over the place saying, you know, you guys are all going to die of inflation and then turn around and say, well, the inflation is gone and then come back, oh, inflation is going to kill you again. And I was just like, oh, good Lord, who the hell does this, right? People who don't understand. They don't know what's happening, right? I have been very, very consistent when it comes to my understanding of monetary policy and what it is that I have delivered on that. Not a lot of people appreciate it. Not a lot of people agree with it. The difference is that I have not changed my tune on it. I'm sticking to my guns because this is what I believe in. This is what I believe from my research, what I believe has taken place. And I'm not going to deviate from it because all my research doesn't allow me to. I can't see it any other way, you know? I mean, even people who are like, oh man, you should look at it like this. The government is trying to just totally just screw you over by doing all these other things. And I'm like, oh man, do you got any proof of that? Is there a speech, a Fed speech that I can look at? Is there anything? No, just a bunch of conspiracy theory stuff that, you know, probably isn't too far off from the truth, but it's really just blowing out of proportion. Is that what's happening here? You know? I love the AI thumbnails. What are you talking about, T-Flats? Thank you, man. I appreciate it. All right. Just like we chose to believe house made of cheap materials or money. Yeah. I mean, vehicles made of sheet metal are money too, right? I mean, there's a lot of stuff that's built really cheaply that's worth a lot of money. There's a lot of technology that goes into a new car nowadays. They ain't the old, crappy little car that they used to be, where just about anybody with a, you know, simple set of wrenches or something could go and just pretty much work on a vehicle. No, not nowadays. That doesn't work like that. All right. Anyone have any thoughts on what happens economically if Iran wins this conflict? Oh, that's not a, I'm sorry, Joseph. I don't think that's a real, I don't think that's really like anything that happens on this planet, we have allowed it, right? The United States is allowing it. And that's what's really scary about the whole thing is people like, I think have a tendency to kind of think, man, they're really putting up a fight, or they're just like they don't know what to do about it. And I'm like, no, that's not true, right? I mean, I'm not saying that it wouldn't destroy the entire globe in the exact same moment. They may know the limitations of what it is that they could fire off without setting off the doomsday machine. But ultimately, the United States can do whatever the hell it wants. It can destroy any nation, any it has all the capabilities, it has the technology, it can do it. All right. And so when I think about things that are allowed to happen, it's really done for a reason. And most people will end up pushing into the New World Order propaganda, you know, all the stuff that goes on that way. And I'm not trying to push back against the saying that stuff isn't true and isn't happening. But at the end of it, this is all about money, right? It's all about the control and the flow of money. Who it is that's backing the financing, who is it that's getting paid the interest payments, right? That's what it's always going to be down about. Otherwise, nobody would care, right? It was just like it wouldn't be a problem otherwise. If it doesn't happen, right? If the United States, and I'm not saying it has to do with Iran specifically, the United States in general, if it does not figure out a way to continue the expansion of the money supply, then what happens is it collapses in on itself. Everybody falls into pain and misery. So as we watch the conflicts around the world take place, this is fine so long as the expansion continues. They don't want, need, should, doesn't matter, all the other stuff, but winning, Like, yeah, no, that doesn't matter, right? So long as the expansion is continuing, because if the expansion happens, everything is cool. Moment that it stops and it starts to fall the other way, now we got some serious problems, right? Like the problems are serious. They ain't serious compared to the other direction in which that will happen when the collapse of the money and the new money starts to fall in on itself. That's going to be incredibly painful. So, no, there's no, like, the United States allows everything to happen. Maybe not everything, but pretty much everything. All right. Iran already won. I love it. All right. Loving my pup. What a great name. Yeah, it is. All right. Uneducated economist. Very good thesis, but your question of will Fed look past inflation expectations, I think, is a no. Well, of course they are. Of course they are. Well, I mean, how else in the world would I have been able to come up with a credible threat theory in which that's exactly what it is that they are doing? Now, at some point, the inflation expectations will fall. It's just a matter of time, all right? Like, it's not a matter of crying wolf. There's really serious things happening, right? That was serious. I mean, I got sick off of COVID. Like, I lost my sense of smell and taste. It was a very real sickness. Like, I'm not trying to deny that COVID wasn't real. It was real, right? It really had a very real impact on people's behaviors, expectations, especially when it came to inflation. Ukraine is real, right? This is a very real breakdown of the supply chain. People came, very close to believing that this was going to set off the World War II, or World War II, World War III kind of thing, right? It's kind of faded in a lot of sense. Like, I'm not saying it's gone, but not a lot of people, like, I don't see people like in supporting Ukraine, all the flags and all the other stuff. Like, I don't see the people lit up about it anymore. It doesn't seem like to be a big deal with them any longer, right? But the conflict still continues. Right? Now that's inflation that's going to be continuously persistent, or is that now accepted into the economy? Nobody talks about Ukraine causing inflation. They did at one time. All right? Same thing with COVID, same thing with this, and the same thing with the next one. I mean, how many people said that COVID was going to fire off hyperinflation? Now they're talking about making the Federal Reserve lower interest rates. Nobody, like, all this, like, I start to push back away from it all, and I think to myself again, it was just like, I'm not going to try and figure out what it is that the Federal Reserve is going to do with this information. The Federal Reserve was wanting elevated inflation expectation to raise the neutral interest rate and get off the lower bound of zero. However they do it, I had no idea what that was going to look like. I knew that was going to be the case, though. This is what it looks like. So for me, it's not a surprise. Now, at some point, that inflation expectations will fall. And when it does, the Federal Reserve is going to have to seek out the neutral position. R star is somewhere around 1 to 1.5%. If the inflation was to vanish, goes back to its 2% target, falls to zero, whatever, I mean, Trueflation says it's 1.8% or whatever it is, the Federal Reserve would then have to lower the Fed funds rate to 1 to 1.5% to remain neutral. Without the inflation expectation, that's where they'll be. It will not stimulate the economy. They could take it to zero. That will not stimulate the economy. They will not be able to get far enough below neutral, the R star neutral, in order to stimulate the economy without hitting the lower bound of zero. There is no stimulation that comes from the Federal Reserve lowering of interest rates. That does not exist anymore. The only way it would work is if you had elevated inflation expectations, and they lowered the Fed funds rate back to zero at the exact same time. Never in their right mind would they do that. The people would lose it, and the Federal Reserve is not interested in that such a behavior. What would be much easier for them is to just sit still and push elevated inflation expectation to raise that neutral interest rate. Get it ever closer to the Fed funds rate, make the economy less restricted. Moving the Fed funds rate back to zero is not an option. That's not a real monetary option in any circumstance. All right, except the very, very, very rare possibility that they would lower interest rates to zero while elevated inflation is running. That's not, that's, I mean, I'm not saying they're not going to do that. I'm just saying that's not a very likely outcome. All right. That's probably not going to take place. So there isn't. The adjustment of interest rates to stimulate the economy is no longer an effective tool. It doesn't work. Hasn't for since 2008. Right? I mean, since the great financial crisis and the lowering or bringing the Fed funds rate to the lower bound of zero and massive quantitative easing, money printing, forward guidance, that failed. At that point, the adjustment of interest rates was not going to stimulate the economy anymore. It hasn't. It literally hasn't. You know? And that's what's so like wild about it all is that people are like, well, what are you talking about? Look at all the stuff that just happened. I was like, all right. So what we had was forward guidance and stimulus packages. Right? Those two things had a profound impact. But the quantitative easing, the actual money printer, nope. And nobody will believe that. Nobody will see it. And that's fine. Right? And I don't care at this point. 99.9% of the people can laugh at me for that. And that's fine. They won't understand monetary policy. They cannot. Those same people cannot explain what it is that Jerome Powell was talking about the other day when he said that inflation ran for 15 years below the target, making the professionals wonder why. I would love to. Hey, can you invite UE up to talk about that? I'll explain it in a working class point of view. Right? I'll totally explain that. Most people, that went right over their head. They missed it. Didn't even hear it. Had no idea what the hell he was talking about. Right? And I'm like, he said it. He said it out loud. Oh man. Anybody else? Nobody else heard it. All right. Whatever. I heard him. What is your son's name? All right, the good question, deplorable. Welcome negative interest rates after the inflation expectations. Yeah, but you can also have to have you're also going to have like central bank digital currencies or stable coin or something of that nature run into because you're going to have a cashless society. They can actually keep cash in the system, but they still have to have that central bank digital currency or a stable coin in operation if they're going to go into the negative interest rates. Like they have to have it. They do not have to remove cash. They can keep the cash in the system. It will be an incredible nuisance. It'll be, riddled with fees. It'll be very difficult to use it, but it will still exist. So the people who are like, well, they'll never get cash out of the system. Yeah, they got a plan for you too. So it's okay. DK4, I'm serious, praying. Uneducated Economist, if the last FOMC post-meeting conference, Jerry said he's staying on the Fed board to push back against Trump if he doesn't stop prosecuting him, hence no easing. Yeah, I wouldn't believe any of that propaganda. Don't fall for that stuff that's being spit out there on the mainstream media. Don't listen to that, right? Reel it in, go dive into the speeches, think about what it is that the FOMC is saying to each other behind the scenes, because that stuff out there is literally what it is that they want you to think and feel and hear. Jerome Powell has very, very little power to adjust the interest rate outside of his one vote with the other 11 voting members of the FOMC. He's a spokesperson. When the FOMC wants to address the people and give them a message, it comes through the voice of the chairman. That's his job, the messenger. Now, he does hold a position. He does have some guidance on the FOMC. He does share his opinions. But every single member of the FOMC, 12 voting members, 5 alternates, 2 advisors, these people make up monetary policy. It's not Jerome Powell who makes up monetary policy. To say that he is being prosecuted because he doesn't adjust interest rates is probably one of the most delusional things that I have ever heard coming from everybody out there on the mainstream media. Fire his ass. Get rid of him. Throw him in the garbage. It doesn't matter. You got 11 other voting members there who come up with the monetary policy. He's one of them. right? So what are you going to do? You're going to smash his one vote? Does that change anything about the strategy of the FOMC, the consensus statement, all the ideas of what it is that they believe should be taking place for monetary policy is down to one person, and whether or not he gets prosecuted for lying to Congress about a budget on a building that doesn't have anything to do with the government? That doesn't make any sense. Like, none of it does. There's literally nothing that can happen there that can change monetary policy. These two cannot work together. They don't. There's nothing there. You can put a gun to Jerome's head. It's just like, dude, you better lower interest rates or I'm going to blast these brains all over the goddamn floor. And he could go to the FOMC and they would be like, sorry, bro, we're going to go get a mop because we're not voting with you. That's the seriousness of it. It doesn't work like that. And so for anybody to even question it or put it in their head about what it is that's going to happen with monetary policy and stuff like that, it doesn't make any sense. It's just literally, I don't even waste the time and to even try to wrap my head around what it is that would mean, because it doesn't change anything, right? And that's very important. The message that is delivered out there to the mainstream media through that is very profound, right? It definitely has a market impact. The people believe it. They totally believe it. They're thinking, oh man, Donald Trump has the gun to Powell's head. He's going to lower interest rates. And I'm like, I'll go get the mop. It ain't going to change. It ain't going to change anything. Because the FOMC is like, they're going to go get the bucket too while I go get the mop. There is nothing that can happen. I'm sorry, Jerome, man. The interest rates don't change because you want them that way. Right? Sorry, they don't change because Trump wants them that way. They don't change because he's getting prosecuted by the Justice Department. It doesn't work like that. But yet somehow out there in the mainstream media, it does. I just don't understand how it is that people can fall into this trap of it. I'm like, does anybody out there on the mainstream media have any idea who the FOMC is? I mean, they talk about them. They interview them. It's not like they don't know there's an existence of the FOMC. Why do they put all this expectations that Jerome Powell can change it? I have no idea why. It's like, how is it that you can actually do that to yourself? Right? And it was just like, here, let me just interview the entire FOMC, find out what it is that they feel that interest rates should be, every single one of these people, since they vote on monetary policy, and then set that whole idea aside and say, so, Jerome, are you going to lower interest rates or not? Because they're going to prosecute you if you don't. And I'm like, what the hell? How does that work like that? How is it that people could be that, well, I'm going to do this and it's like, and pretend like I didn't just do this, It's just like, you see where I'm getting at? Like, here you got the news broadcasters who understand that there's an entire FOMC. They interview all these people separately. They talk about how they're going to vote on monetary policy, then set that whole thing aside as if it didn't exist, and then ask Jerome Powell if he's going to lower rates. Like he can do it. You see what I'm saying? This is why I lost faith inside of it all. I'm like, you guys, what the hell? I mean, he just as far as not only not trusting anything that is saying there, it's obviously delivered propaganda. So what is it that you want me here to again? What is it you're trying to deliver for a message? Because obviously there's something going on here that isn't right. If you know where it is that the monetary policy comes from, only to set it aside, pretend like it doesn't exist, and then go and ask Jerome Powell if he is going to lower rates. Kind of like people knowing the government is corrupt, but trust the voting system in elections. Right? Exactly right. It's just like it's just like, oh, all the politicians are lying, all this other stuff, and then they go and trust it and say, well, let's look at these numbers, look at the voting, look at all this other stuff that they're not honest about. And I'm like, you already said that they weren't honest, and now you want to prove to me how they're not honest? And it was just like, what are we doing here? It was like, we already know they weren't honest. We don't have to prove it. It's like, uh, Mexico going cashless is a big deal, big trading partner. The entire world will go cashless. Everything's going to go cashless, and it'll all be stablecoin, central bank, digital currency, tokenization. All right. I love listening to Simon. Everybody does, Deplorable. Thank you so much, man. I try to, I try to make it fun and entertaining for people. When Jerome leaves the FOMC, the FIMC, the FOMC, others are destined to follow. Remember, I said that. Fact. All right. And see, you know what I even love more about this whole idea about prosecuting Jerome Powell is that what a lot of people don't really understand about this, and something that I brought up right away too, right? And this is because I thought about this for just a minute. I'm like, wait a minute here. The way that the FOMC, or I'm sorry, the way that the chairman is brought into its position is through essentially an approval process. You got to kind of work your way up through the banking system, and then you get confirmed essentially through the president, through the Senate. So there's like this process in which that you have to go through to get there. Now, part of this process is essentially being confirmed by the Senate, but the Senate says they're not going to confirm anybody until the prosecution's over. So they're talking about Warsh. Like, hey, we're going to confirm Warsh. He will become the next chairman. But we're not going to confirm Warsh so long as you have this prosecution going. So now a lot of people are like, okay, so if this prosecution is going, the Senate's going to blockade or block Warsh from taking position. That's fine. But that leaves Jerome Powell in position. So here it is. His term can come to expiration. Warsh should be put in position, right? Be confirmed by the Senate, be put into that position. But because Jerome Powell is being investigated, right, being prosecuted, or at least the idea behind it, the Senate says we're not going to confirm another chairman, which leaves Jerome Powell in position after his expiration, because the chairman holds the position even after his expiration until the new chairman has been confirmed. So this is a way that they can actually keep Jerome Powell in his position after his expiration by literally putting him into a position of being prosecuted. So long as the Senate hasn't confirmed the new chairman, he holds the position. Isn't that crazy? Like locking him in somewhat permanently. So here it is. Trump wanted to get him out, trying to get him fired, trying to get him prosecuted, and literally creates a situation that keeps him in place. Even after the expiration, the exact opposite of what it is that Trump was trying to do. And so when I think about that and I looked at it and I'm like, holy crap, none of this stuff has anything to do with monetary policy, doesn't have anything to do with government, doesn't have anything to do with anything at all, but yet has been created in such a way that can literally keep Jerome Powell in his position, even though it doesn't have anything to do with anything. Right? I mean, think about it. What Jerome Powell is being questioned about is whether or not he lied to Congress about the budget of the building cost. The cost of the Federal Reserve building is a private company. It's their money. It's their budget. It's their screw up. It's like somebody coming to me and saying, dude, how much do you think it was going to cost to build the house? I say it was $250,000. How much did it end up costing you? It cost me $425,000. It was like, dude, you screwed up. We ought to sue you. And it was like, it's not even your business, man. Get out of here. Right? Yeah, I screwed up. I suck at what I do. Screw you. Go away. Right? Like that's literally what's going on here. And now in a roundabout way, the Federal Reserve, like we, the people, are owed money by the Federal Reserve because they're essentially operating in the red to us. But that's going to change. At some point, they will be back in the black and they will pay us back, as far as all the money that they owed. And none of that will be an issue any further. Now, I mean, I guess that's not a guarantee. It may not happen, but ultimately that's the plan, is that they're going to pay all that money back and they won't be operating in the red. They'll be operating in a profit and they'll be paying those profits back to the Treasury again. So yeah, I can see in a roundabout way right now, because the Federal Reserve owes the Treasury money and they went over budget, that would be a pain in the ass to the government saying, hey, man, you guys are spending money you don't have and you owe us money. In that sense, I could feel like, yeah, okay. It's kind of like, loaning your buddy money and then you watch him go out there and buy a new motorcycle or something. And it's just like, hey, or repair, does something to his house when he owes you money. And it's like, hey, man, don't you think you ought to pay me back before you go and spend that money? I could see where the government might be a little pissed at the Federal Reserve for that. But is this really what we're talking about? I mean, we're talking like, what was it? I don't even know how much it was, a couple $1 billion or something. I mean, this whole tariff debacle was like hundreds of billions of dollars. And we're worried about a few billion of the Federal Reserve to create this whole havoc within monetary policy. Does that make sense to anybody out there unless you were trying to create a credible threat? See, once you got the credible threat, now you can use that. Fed independence has a profound impact on the markets and the general economy over time. Married with children was the gold standard. What time is it? Alrighty. Well, let's see, an hour and a half into this. Wow. Well, I guess an hour longer than I really wanted to go. I was just going to go a half an hour, but I just kept talking like I do. Yeah. All right, Simon scored 5 touchdowns. I wonder if he does, Simon. Do you know that we are in the eye of the storm right now? Of what storm? Tree huggers sue in court for trees already cut in the lot. Legal lumber, but held up in court over 2 years. Lumber company goes bust, and the tree huggers laugh as they lose the case. I am pretty sure, this is Wayne, I am pretty sure it would need a congressional act to eliminate physical cash. Just saying, the people of Congress are supposed to be representative of those who elected them. I don't think that's the case. I don't know if that's, I mean, maybe it is to provide the world with cash, but I don't think that's necessarily a requirement of the Federal Reserve. I don't know, maybe it is. I've never read that, but, or at least because I don't know what level that would be. Like, you think if it was mandated by Congress for the Federal Reserve to, within their charter to supply a certain amount of cash to the people out there, you would think that it would be like a ratio that you would find. I don't know of this like figure or this number. I know that there is no legal requirement for the people themselves to accept cash. Like there's no store, there's no anything that is required to take dollars. Nobody is. Now, the government requires dollars to pay taxes, right? You're essentially paid dollars, and if you're paid dollars, then you're owed taxes because you're operating within that system. But it's all voluntary. You don't have to accept dollars, right? And neither the store doesn't have to accept it. Nobody does, right? There are certain people who demand it, like the government, but that's voluntary. Everything is voluntary when it comes to that. And we don't really feel like we have a choice. And because of that, this is what it looks like. But I would have to look into that to see if they are required to provide physical cash, because then you would have to think there would have to be like a certain ratio. Simon knows what's coming. Well, I mean, I have an idea of some things that I would expect, right? Tokenization, stable coins, cashless society-ish kind of thing, negative interest rates. This is all part of the monetary policy. It's a matter of time before it gets there. What it looks like on the way there, I couldn't describe it. Like, is there going to be more war, more separation, more problems, more all that other stuff? Yeah, like I would anticipate there's probably going to be a lot of heartache and horribleness that people are going to want to describe and look at and say, what do we do to prevent this? And I'm going to think, I don't know, because I don't know what it is that you can do to prevent it. People don't want to have the horribleness, but they want all the best, right? They want all the awesomeness that comes, but then they don't want, the bad that comes with it. It's like, there's a balancing act here. Everything comes with the balance. It's like even if you didn't want it to balance, you're going to find a naturally occurring balancing act, right? It's just like, I don't know what do they call it? Excess potential. All right. Are we good? Are we good here, guys? Do we finish off today? I really just wanted to talk about this lumber newsletter and talk about the inventory depletions and the prices of everything. That's really what I wanted to get out today. But breaking this stuff down, the talking about the economy, breaking down the monetary policy, the economic forces and stuff, and talking about it regularly. I love it. I love sharing the information. I love having the conversation. I love you guys here so much, all the comments, all the great, people who are here regularly. All right, what's up, Quebec? What would be the impact of oil in the economy if things continue as they are? I don't know. Like, there's a lot of what ifs that you could put in there. I mean, if you let me think about this for just a second. Because, just ask the question again. What happens if oil goes up? Okay. Well, how much like I already know driving the Suburban around, it's $5 a gallon. Or yeah, it's $5 a gallon for gas right now. It gets like 12 miles to the gallon. If I'm really lucky, I might get 15. If I really pay attention and it's a nice, like, downhill coast and tailwind and stuff like that, I might get 16. I don't know, right? Like that's as good as it's gonna get. So I don't drive. Like I only drive when I absolutely have to. Because every time you fire this thing up, I mean, you're talking like just getting it out of the driveway is just getting, dollars flying out the door, right? So I'm not going to do that much driving. Well, I'd assume that if I'm cutting back on driving, probably a lot of other people are going to be cutting back on driving too. So what ends up happening with supply? Now, right now, it's very difficult to see this because supply is so limited and all the other issues that we have going on. But what ends up taking place? Right? People stop driving as much, and then you have a slowdown in the demand for the oil. But that's not the only thing that slows down. What else slows down? All the rest of the economic activity that would have taken place from you leaving your house and driving somewhere. Most of the time when you drive somewhere, what are you doing? You're driving someplace to spend some money. Right? You're going somewhere to have fun, going to pick something up, going to do something. Otherwise, you wouldn't have left the house. So here you have this idea that there is going to be these high prices because of these oil, which is very true. Right? Everybody initiates this. Oil costs me more. I'm going to have to charge more. Everything's going up, right? This elevated inflation expectation starts to happen. But at the exact same time, what else starts to happen? People pull back. They say, I can't do it. I'm not going to buy into it. I got to save my money. I can't afford it. All the other things that happen. Well, what happens within the economy after this? You raised all the prices and now people don't want to buy anything because it's so expensive. Now you have the recessionary pressures that start to kick in. Now, this bullwhip effect that starts to happen, it takes time. The lags within the economy are different from every commodity to every, item out there, whether it's a domestically made thing or, shipped in from foreign production. But this starts to ripple through the economy in this fashion. So as people kind of think one-sided about it, it'll like, okay, man, it's going to drive the prices up of everything. You're absolutely right. It's going to crash everything and prices are going to come down. You're absolutely right. How is it that you're looking at it? How far out is your timeline? Like, where is it that you're in position of this? Because just because you have this war going on and taking place doesn't mean it's going to last forever. It can't. No war has lasted forever, right? They last for a really long time. Some of them can go on for an entire lifetime. Sometimes many lifetimes. But what we're having here taking place right now, and it's pushing the elevated inflation and inflation expectations and the oil prices that are moving up, I can only assume that people are probably going to act accordingly to that idea, and they're going to start raising the prices up, and then everybody else is going to act accordingly to that and not buy anything. So, I mean, how bad can it get? It can get really bad, right? Start dropping nukes all over the place and watch how bad things get. I mean, how far do you want to take it? To me, I don't want to take it to that far, to that extent is what it is that I'm thinking about, because thinking about death and destruction and horribleness is generally going to lead you into a negative attitude, and you're probably not going to find a whole lot of opportunities and awesomeness from that. Right? It's probably going to lead you down a path that you're going to be very unhappy and depressed and trying to figure out what it is that you can do to get out of that situation, knowing that you could have done that from the very beginning. You just had to give it the right meaning. So people like, it's not a matter of being like lost to the idea or like unaware or any of that stuff. You can be very aware of it. You can, understand that it's taken place, but you don't have to give it meaning that says this is destroying my existence. You can give it whatever meaning you want. It doesn't mean you have to give it a positive meaning. It just has, maybe is, you can give it a neutral, right? This is like, literally nothing has a meaning outside of the meaning that you're giving it, right? Everything is a neutral. And the only reason why you're giving it that meaning is because of the belief system that you've had. I'm giving it this meaning because I believe this, and this is the reason why it's going down. Right? That's your meaning. It's not the truth. It's your truth. Right? But that's not the reality of the situation. Some people might find something being a completely evil intent. Well, the people who are doing it find a religious experience out of it because of the meaning that they had given it. So this is important to understand. It's like, you can look at the world and say, hey man, this place is a hellhole that's falling apart in every way, and let me explain it to you from every single situation that you could ever possibly imagine. I can't think that would be a very profitable person. I just can't imagine that. Maybe they are, they can figure it out, but spreading it out, like maybe Alex Jones or something, like he spread a lot of negative stuff and made a lot of money at it. The oil infrastructure in the Middle East is definitely taking hits right now. You got shroomies in your pocket, Simon. Invest accordingly. Coastal Oregon, best climate for shrooms. It really is. All right. In 2008, when the market crashed, oil was $147 a barrel in July and went to $32 in December. But housing market crashed and retirements were lost from it. Yeah, you're talking two different things going on there, though. I do worry about EMP stuff. Yeah, the EMP commission warnings have been pretty alarming. I see lots of power line work. Seems like it's being taken seriously the last 2 or 3 years. Yeah, I mean, I can see where that would be a pretty heavy terrorist attack, to hit us with something to knock out the power grids and stuff. I can't smoke hash and talk about this. You're an effing... Wow, what's going on there? Smoke some hash, Simon. Come on, bro. What's going on with mycology, man? All right. Oil prices always go with the recession. Yeah, but I just don't think we're going to have the recession like a lot of people had anticipated from the past. That's why I even coined that term, a recessionless recession. People were like, "Oh man, the yield curve, the SOM rule, all these other stuff," and I'm like, "Yeah, I'm going to push back against it. I'm going to say that isn't going to work this time." All right? And a lot of people were like, "Dude, man, how can you say that? You really don't know." And I'm like, "All right, man, but whatever. I'm gonna stick to my guns on everything that I say." Right? Like if I realize that I made a call that was inaccurate, then I'm going to figure out why it was that it was inaccurate. Very much like I didn't think the Federal Reserve was going to get the Fed funds rate much more than 2.5%. But I wasn't thinking about the way that I was saying it, right? And I was still somewhat accurate, but not accurate in where the Fed funds rate would be, but where the Fed funds rate would be in relation to the inflation expectation raising the neutral interest rate. See, this is really where I think like I got a better understanding of the monetary policy by actually making that mistake on what it is that I was thinking would be restrictive position for the Federal Reserve. So when they got it up to 2.5%, I was like, man, this is as far as they can go. But then they raised it all the way up to 5, and I'm thinking, well, how? Wait a minute here. And then I got to thinking, wait a minute, if the neutral interest rate is rising with it, then the economy is less restricted. They can keep taking it as hard as they want. Excuse me. So long as that neutral interest rate is rising with it, then the economy doesn't get any more restricted. And this is the reason why they were able to take it up beyond that 2.5%, on the Fed funds rate without, destroying the economy, is because that neutral interest rate was rising up with it. Once I figured that part out, I was like, that makes more sense to me why it was that they were able to get it up beyond that and could even take it higher if they wanted to. And then it even gave me even better understanding of how it is that they use that inflation expectation to actually create a less restricted economy, or more restricted, depending on how the inflation expectation is moving. And that, what I feel is probably one of the bigger mistakes that I had made as far as a prediction call goes, actually gave me a much better understanding of what it is that has taken place with monetary policy, because I made that prediction that was inaccurate, trying to figure out why it was that it was inaccurate. And then even on top of it, I thought to myself, it wasn't like I was really inaccurate. I was inaccurate in my understanding of where that restriction was going to be. If that neutral interest rate, I wasn't thinking about the neutral interest rate rising. R star is low, been low for a long time. I'm like, nah, this R star isn't going to move around. But I wasn't thinking about an inflation expectation being piled on top of it. Once I got that part figured out, I'm like, oh, now I get it. Now I understand how it is that the dropping of inflation expectation raises the real interest rates, putting pressure on the degree of monetary stimulus, making the downturn worse. That makes so much more sense to me now. All right? So much more. Does it make sense to everybody else? Or just me? Maybe it's just me. Maybe it's only me it makes sense to. I don't know. All right, I am the only one high on shrooms tonight. Yeah, I think that might be right there, mycology. All right, I smoke 2 joints in the morning. I smoke 2 joints at night. And on with the smoke 2 joints song. All right, kind of like a guitar amplifier with the volume knob at 0. This time is different. The recession is still here, but I'm detected. Well, the recession came from the lack of aggregate demand, right? Like that's where the recession comes from. It comes from the lack of aggregate demand. When consumption falls, this is the problem that they face. Deflationary pressures start to come from that. They want to deal with that by lowering interest rates and then getting people to go to work. When people go to work, they get hired, more aggregate demand comes from more aggregate demand, and then consumption is the result of that. So this is how the Federal Reserve would always have looked at it. But then, after the great financial crisis, the unemployment hit that lower bound of 0. Now things like the SOM rule, the inverted yield curve, all these recession predictors don't work anymore, because the recession doesn't kick in when people lose their jobs or stop consuming, because the people themselves aren't the economy anymore. They're up at the top 10, 20%. That's why the recession doesn't kick in. That's why the SOM rule doesn't work. It's why, the inverted yield curve doesn't make sense as far as like being a recession predictor. It doesn't work like that anymore, because all those things would have been focused in on the middle class individuals not working and consuming. That's what those things were indicating. But it doesn't matter. They can indicate it all day long. It's like, hey, those people aren't working. And it was just like, that doesn't matter. Right? That part is not the issue. The issue is up there at the top 10, 20%. So go ahead, let the SOM rule kick in, let the inverted yield curve take place. None of that stuff is going to really make any difference. Not at this point. I mean, it does make a difference, and it will at some point in the future when it comes to the grand collapse of everything. But what it is that people had anticipated from the economy in the past, and all these economists out there who predicted and stuff like that, I don't, they never go back and being forced to eat their words. It's just like as if they made these bad predictions, and then everyone's like, oh, well, I guess we just all forget about that. And I'm thinking, well, wait a minute here. Like, all these really super famous $1 billion, managers and stuff like that, were making calls about the Federal Reserve being bumbling idiots, not knowing what they were doing, bouncing around like Mr. Magoo, having all these issues in their monetary policy, and yet the uneducated economist is going, no, that's not right. That none of that stuff makes any sense. The Federal Reserve is doing exactly what they said that they were going to be doing. And by you, these billion-dollar investor managers talking in the way they do, they literally deliver the power needed for the Federal Reserve to get their monetary policy to the position that they want. They needed the people to feel that fear, anxiety, and doubt and inflationary pressures that came from it. Like those people delivered that to the markets themselves. They're like, here, Fed, yeah, what do you need? You need inflation expectations? Hold on. The Federal Reserve is a bumbling idiot. They don't know what they're doing. They kept interest rates too low for too long. Did I get you some inflation expectation? Good. Here, give me my beer back. You know, it's like, all right, like what the best wood to smoke my ham? Um, I don't know. Like I'm into more like smoking fish around here, as in like, or maybe like, you know, beef or something. As far as smoking a ham, I would probably use like a cherry. I think that would probably be a decent flavor on ham. You know? Um, I personally wouldn't like use like mesquite on there. Like I think that's more of like a beef kind of flavor to it, but I mean, I guess each their own on that. Definitely not alder. Alder is straight up for fish, especially salmon. Like that's the only thing I would ever smoke with alder is fish. So yeah, for me, I'd probably move that over into like the cherry or something, cherry pecan, something one of those two. All right. I prefer steamed hams. Recessionless recession, genius. Yeah. Now you can go back and find those videos. I did them like 4 years ago. I don't know, maybe not 4, 3 years ago. I did the recessionless recession videos. Came up with that idea, and I'm like, man, all these people predicting a recession, I don't think we're going to have one. Yeah, I think that we've already bailed out these corporations, and the unemployment's not going to rise significantly. Yeah, I mean, it's like, here it is. All right, I love everyone here. Sorry, I got too high and started having too much fun. Yeah, you did, my college, eh? But at least you're in a safe place, so. I only smoke Soma. God, you guys get off of that stuff. All right. Thank you. Very informative. Yeah. Thank you guys for being here. Alton Brown just did a smoking fish video the other day. Did he? Alton Brown is about the best. I love the way he does his shows and stuff. Like, because he really gets into the science of what it is that's happening with the food. That's what I love about it. He's like he's explaining how this is actually happening, and why it's tasting so good and what it is that's taking place within the heating and the cooling and all that, the absorption of the flavors. I love the way he talks about that kind of stuff. It's really unique and it's very cool. It's like the science of cooking. The only single I'm going to use is a Fed higher for longer. Does the gig economy influence the job status at all? Oh, yeah, I think so, big time. Like, I don't know about the jobs numbers themselves as far as that goes, but I think as far as like the general working population and the people go, those who have side gigs, I think generally those people are probably doing a little bit better than those who are just depending on a single day job. Now, when I say they're doing some slightly, like, not that much, but when you have a side gig, generally you're going to have the ability to pay your bills, maybe not go into debt. A lot of people taking on side jobs because that had already happened to them, so they're trying to get out of those things, which again is still moving you into like a better position. Even if you are in debt, but you're getting out of debt, like that's a good thing happening there. So, like the gig economies that are out there, I really do think that they have a very big impact on the lower working class individuals as far as their abilities to like trying to figure out a way to make it through this world. But as far as like the numbers go and whether or not they are showing like, massive employment or low unemployment on account of those gig jobs, I don't know how much that is actually influencing those numbers. Like, I'm sure it does, but I couldn't tell you to what extent. All right, I want to see the smartest guy I've ever met smoke hash live on YouTube. Is that too effing much to ask? I mean, yeah, it's a bit much to ask. All right. Gig jobs must do something because they try to stop some of them. Oh yeah, definitely. Yeah. Oh, what was Alton's conclusion? Did the fish prefer Marlboro or Newports? Yeah, smoked fish tastes all right. It's kind of hard to light and doesn't get you very high. Yeah. It's a lot to ask, but I'm asking. Yeah, it's a lot to ask, and I'm probably not gonna pull that one for you, man. I'm sorry. All right. All right. Neon does that. Let's see here. Okay, guys, why don't you ask him to drink a beer? Yeah, I won't be doing that. I haven't had anything to drink in like, I don't even know, 10 or 11 years. I really don't even remember the last time I drank. I don't like, I just gave it up one day and I said, that's it. I'm not doing it anymore. And it had been kind of like, in the process of happening, but yeah, just one day it was over and I don't remember what day that was. Yeah. All right. I don't want Simon to poison himself. I love him. Thank you. Appreciate it, man. Do you think the Fed will implement something just before they stop the higher for longer? What would you think that they would implement? Like, what will happen is if the inflation expectations fall, then the Federal Reserve will probably have to chase the neutral interest rate down, right? Like, so if the neutral interest rate is falling, they're probably going to have to follow that down to keep the economy from becoming too restricted. So, in that sense, I don't think that's something that's going to be announced or, have some kind of implementation done ahead of time. I don't know what it is that would need to be done. If inflation falls, then the Federal Reserve would have to follow the inflation down, right? Follow the neutral interest rate down. But that would be the only time that I would ever think that they would lower interest rates is to follow the inflation down. Other than that, there's really nothing. There's no stimulating effect that comes from the lowering of interest rates, unless there was an elevated inflation at the time, which I just can't see. If you push ever increasing amounts of inflation, you could push the neutral interest rate right past the Fed funds rate, and the economy can become essentially stimulated, and the Fed still hasn't moved. I mean, higher for longer? Yeah, fine. They're still stimulating the economy because the inflation expectation has risen so much. So whether people think, well, the Fed is too high, it was just like, well, in relation to what? The neutral interest rate? They're not that high. In fact, they might even be neutral as we speak. In fact, considering what it is that's happened, it may very well could be in a position that is actually stimulating the economy right now. We just don't realize it. I mean, I know at work, things are really starting to pick up. Like I've been gone for a week and I came back and I'm like, holy crap, I got hammered with special orders today, way more than I normally would have for the last few months. And I'm thinking, guys, has it been like this for the last week? And they're like, yeah, it kind of has. And I'm like, huh, well, it's about time. It's summer. I'm guessing project delaying fatigue is kicking in. People have postponed for so long on their projects that they're finally like, that's it, man. Come spring, I'm pulling the trigger. I don't care what's happening out there. And I really think that that's actually going to happen this summer. I don't know to what extent, but you can see from over the last few years that people have held back on starting new projects for a very long time. And at some point, they're like, that's it. I'm not waiting any longer. Right? Project delaying fatigue. Eventually, I mean, it's a real thing. It happens. And then all of a sudden, people just start flooding in because it's like a backlog of projects that have been waiting for better times, waiting to see what happens, waiting. And finally, it's like, okay, we can't wait anymore. And here comes the flood of projects. That could happen too. I'm not saying that's going to happen, but it very well could. I mean, I could see that being the case. Very much like a bullwhip effect. All right, Simon smoking those Cantillons. That's what the L smoke, what the E smoke, the EI, the EU. All right. Let's see here. Yes, Justin. The answer is yes. Okay, people getting tax refunds now. Uh, what kind of changes? How you can only hold the economy so much. All right. Was the Easter Bunny yesterday a channel member here? You talking about from my bingo? No, she's not a channel member. I don't know, maybe she is. I haven't seen her in here though. I am swamped with work for the rest of the year. Right on, deplorable. Flatbed and corners. What is it? Cornstoga? Are picking up big time in the trucking world. You know, that's kind of interesting to hear that because I was kind of curious about that myself. So many of you know that where I work at, working at a lumber yard, I get a lot of calls for all kinds of stuff. But one of the things that I get calls from is shipping brokers looking for freight to haul around. Like, there's truck available to haul stuff. They're looking for the stuff to haul and trying to match these two together. And so when they're calling us up, they're looking for anything that can be hauled anywhere at any, like for anything. And we don't need them. We don't need the service. We have our own fleet of vehicles and all our vendors deliver to us. We just have no use for the service. But they call us all the time. So there must be quite a few of these type of companies, these logistic companies, these brokerages, and trying to find freight for these trucks or, whatever, matching them all up. And when they call a lot, like when I get a lot of them and I can hear the other salesmen getting them, and there's like a lot of them, it's a sign to me that there's a lot of capacity out there for trucks, right? Like there's plenty of trucks available for shipping stuff. But then when these calls fall away and we don't get them as much, it tells me that shipping is tightening up. And now this isn't something that you can see out there like on a chart. Well, I'm sure there's some shipping charts out there that you can find, but not like these logistic managers, these shipping brokers looking for freight to haul around. I don't know if there's any kind of like daily chart that shows how much demand that is coming from this. I'm just going off of the, anecdotal part of things, just getting my phone calls and listening to the other salesmen out there. These things have definitely cut back quite a bit over the last, month or so. Prior to that, it was a lot. We would get them constantly, but over the last month, you can definitely see that it's, that it's slowed down quite a bit. Like we still get them, but there's just not as frequent. All right, lumber was being provided because humans were saying that they needed lumber. As a new CDL holder and recently doing OTR, the last few months go on. Oh. Yeah. As prices climbed and business picks up, does not normalize the inflation? As prices climb and business picks up, does that not normalize the inflation? Well, I mean, I think like what is normal inflation anyway? Like is there a natural occurring inflation that should be taking place within an economy? Like Cantillon doesn't describe a naturally occurring inflation. He just talks about when new money comes in driving the prices up of everything, but not one that should naturally be there, right? Because there isn't one that should naturally be there. It's when the new money comes in and what that new money is now chasing as far as creating the price increases. So when you have like this generic term, we're going to target 2% inflation. It's just like, how do you do that? Like, how do you make sure that you can target a 2% inflation rate since it really comes down to the decision making of people and where it is that they put that money towards? Like, how do you target this 2%? And then even on top of it, should it be targeted exactly 2%? Like, where is good inflation? Between 1 and 3? Like, is that decent? Like, you can't nail 2%. There's never been a time in history. So maybe it should be like a channel, like a range, between 1 and 3% the entire time. Would that be normal inflation? How do you like, what's normal inflation? How do you normalize it? Uh, I'm going to go, guys. I got like 10 minutes left or 10% on my phone here. And we have been at it for over 2 hours, but you guys are awesome. I love doing these lumber reports. I think they're probably some of the better stuff that we can internalize as far as understanding what's going on in the broader economy. And it's stuff that you're probably not going to hear a whole lot of other places out there because there's just really no other place to get the information if you're not like in the game itself. Those who are working within the industry, like the retail, the distribution hubs, manufacturing, like the lumber mills or something of that nature, everybody has their piece of the information and they can all see a really good chunk of that. But piecing all that stuff together is very difficult if you're not in the right position. And that's what I love about being up here in the Pacific Northwest is that I know mill operations, I know truck drivers, I know distribution hubs, I know other mills that are not in my area, I know vendors, and it's just like there's no corner of this market that I can't see or that I can't ask questions to figure out the answer to. So having that unique position where I am in the location and then just being in the retail space itself really gives me a unique view when it comes to the lumber and the lumber industry. And following lumber is going to give you so much better understanding of what's happening in the broader economy. Because again, when the broader economy is kicking in and people are active and there's a lot of transactions happening, you're going to find evidence of that within the building industry. Because when an economy is operating and it's happening and everybody's very active inside of it, you're going to find that the new construction market is going to be the result of it because people like having new houses, right? And new buildings and new places and new stuff. So that's going to be the sign of economic activity is when that lumber demand starts to pick up and there's just not a lot available out there and you really start to see the prices start to increase. That to me is going to be the sign. Like that's going to be like when the recession is over, this recessionless recession, and we're back on the upswing of things. How far out to what that looks like, what an upswing really means, I couldn't really tell you what any of that stuff is. But we'll find out here in the future because we're just not operating in the same type of economy like we once did. To think like, the average working class individual being able to buy that house and raise that family and do that sort of thing. Yeah, maybe some areas, some people might be able to get it done, but it's a very, very hard, difficult road to go down. I know. That's what I'm doing right now. And so to think about what it is that the future has, it's going to be one of ever increasing amounts of debt issuance, separation between the rich and the poor, but your opportunity to then take advantage of some of the situations that are happening within it are going to be unique to you. And that's the whole point, right? To recognize where it is that you can take advantage inside of that thing. Not everybody's going to do the same thing. Some people are going to get into construction and do building. Some people are going to get into finance and sell mortgages. Some people are going to be doing stock brokerage kind of stuff. Nobody's going to be doing the same thing, but we're all operating within the same storm, same weather, the same economy, but we're not all in the same boat, right? Yeah. Okay. Uneducated economist, you guys let me know. Thank you so much for everybody for being here. Thank you for hitting that thumbs up button. We got 112 thumbs up with 117 people watching. That's awesome. Love it when I see that. $29.02 in super chats because you guys are always so supportive of the channel. I can never thank you enough for that support because YouTube ad revenue is just in the toilet. All right, but that's okay. We don't need that in our lives. What we need is good network, good people, and good ideas and positive ideas and motivation and all that other stuff. Right, all the good stuff. Uneducated economist. You guys let me. Oh, one more thing before I let you go. School, right? We're going to be doing the webinars on the school platform. There's a link down in the description. It's going to be great. The webinars are awesome because you can actually have conversation with me. We talk through it. We break down a bunch of stuff. We've done one webinar so far. It was a really good one. I'm looking forward to doing the next one. That's going to be Saturdays. We're going to be doing them early, about 9 o'clock in the morning. Probably run an hour or two, knowing me, because I just don't ever shut up. But it's going to be a good opportunity to actually have a conversation with me or the other people within the webinar. Should be awesome. Great questions, great conversation. And really the only way to internalize this stuff is to think about it, read it, talk about it regularly, because we have to change an entire belief system that was built basically on false narratives. Once you see them, once you recognize it, it's okay to think, man, I was misled, right? But that's okay. Even understanding the misleading part of things is going to give you a better understanding of where it is that you need to position yourself. So don't think it as a bad thing, right? Don't think of it as anything like, it's just like, man, I can't believe they've done this to us. Just understand it for what it is and saying, hey, man, with this new understanding and this new information and this new belief system, I can now look at the economy in a different way, look at what it is that's being said out there in a different way, to then give me a different understanding of how it is that I could possibly position myself in accordance to this. You have to think, we break down old theories, right? We break down some pretty in-depth stuff. When it comes to monetary policy, we're not diving into the shallow end, right? We're definitely in the deep end of things, and way more than most people are, especially considering the level of education that I have to even try to research monetary policy. But man, after doing this for 20 years and really solidly for a good 7 now, I can't think of anything else that I would be doing with my existence, man. I love this. I love the topic, and I love sharing the information. And some of the stuff that I have found, I know is unique to us here on this channel. Really, nobody else is discussing, and that's just fine by me. They can go ahead and look at the shadows on the wall, right? Benny, boom, man. I'm just now bailing out, man. You just get here right as I go to leave. Thanks for showing up, though. All right, Uneducated Economist, you guys let me know. Simon is the hardest working man in the biz. Thank you, Benny. I appreciate it, And that's one more thing, man. I appreciate it. I like it when people recognize, they say, man, you work hard, you get this stuff done all the time. But to be honest, it isn't work, man. I really love it. It's truly my passion. I can't imagine myself doing anything else. So I love being out here. All right, there's a reason there is a shield behind the name. Level with us. Does mama allow hash in the house with the kids? Nothing else. All right, Uneducated Economist, you guys let me know.